Hello, and welcome to Crypto Craze, your go-to source for the latest and greatest in cryptocurrency news and education. Buckle up for an intense ride as we take you on a journey through a content-packed video that is not to be missed. So please hit the like button, subscribe to the channel, and turn on post notifications. Today, we're going to discuss a fascinating phenomenon that's back with a vengeance: crypto airdrops. It's a truly crypto-only craze that involves the distribution of tokens to early adopters of protocols and platforms. And it can yield highly valuable tokens, sometimes worth thousands of dollars, if not more. Really quick, guys, it's worth noting that I am not a certified financial or investment advisor by profession. Please understand that this video should not be taken as financial or investment advice, though this likely comes as no surprise to you. So what's the deal with airdrops? Airdrop hunters, also known as airdrop farmers, try to speculate which projects might conduct airdrops and make themselves eligible for as many tokens as possible. With so much potential money on offer, some users unsurprisingly try to grab as much of the airdrop supply for themselves as they can. Such communities have picked up steam in the past year, with some hardcore players managing hundreds of wallets or more. If you're wondering if airdrop farming is easy, the answer is no, it's not. There are risks involved. Depending on the network, there will be some costs to using the network, including transaction and blockchain-to-blockchain bridging fees, trading fees, and slippage, and so on. The more wallets used, the greater the cost. And if an airdrop doesn't happen, an airdrop farmer might lose money in the end. But let's focus on the potential rewards. For example, Leo Research, a pseudonymous Russian individual, and their team made close to $1 million by farming airdrops. Blur gave us something like 300,000, Arbitrum gave us around 108,000, Aptos gave us 125,000, and Optimism, 120,000. And Ori, another pseudonymous Russian crypto user, filled out a Google form for a project called Inverse Finance and received 80 tokens worth $80,000, all for just filling out a form. So how do you maximize your chances of hitting an airdrop? Leo Research and his team have built a community focused around airdrop farming and similar crypto strategies called NFT. The goal is to provide this community with research focused on helping them to maximize their chances of hitting an airdrop. They sold 2,000 NFTs that provide trial access to the platform, showing serious demand for airdrop farming among the wider crypto community. In some ways, airdrop hunting is a simple business. The core idea is to identify projects that are likely to issue a token to early adopters of the platform, then interact with that platform over a period of time, ideally involving significant amounts of money. Then, if an airdrop does take place, each wallet will receive an allocation, the payday. But it's important to be careful. In Ori's case, they used 100 wallets to make transactions on the Arbitrum network in the hope that they might be eligible for a potential airdrop. They also made sure that these wallets weren't clearly connected, as this would make it likely they would get excluded from the token distribution. Ori said these wallets were eligible for the airdrop, but didn't share how much they made from it. Finally, it's crucial to note that airdrops can be a game of chance. Some projects might have airdrops that are worth a lot less than expected, and others might have bugs in the code that can lead to larger allocations. So always do your due diligence and research before investing your time and money. For our next story of the day, we're talking about an interesting phenomenon that savvy investors might want to pay attention to: the sale of OpenSea shares at steep discounts on the secondary market. OpenSea, the NFT marketplace, is a highly valued startup with a valuation of $13.3 billion as of early 2022. However, like many private companies, OpenSea does not permit the sale of its shares by staff or investors without the board's approval. So how are investors getting a hold of these shares? The answer lies in special purpose vehicles, or SPVs. These are legal entities set up specifically to facilitate secondary market transactions. Even if a private company like OpenSea restricts trading in its stock, investors can still buy and sell indirect interests in the company's stock by trading the ownership interest of an SPV that, in turn, owns the private company's stock. This workaround is the source of some tension between startups and their shareholders, but it provides an opportunity for investors to mark-to-market their shares and potentially make gains. And in the current beleaguered state of the crypto and global markets, startups' valuations have taken a hit. This means that some well-capitalized startups have managed to weather the downturn without needing to raise more money, avoiding the dreaded down round. However, secondary market platforms like Forge Global offer another barometer for the value of startup equity. And OpenSea is a prime example of this. As of March 5th, OpenSea shares were trading at a 51% discount on Burrell, a secondary market platform for startup shares. This is despite OpenSea's prohibition on unsanctioned secondary sales since March 2021. Some investors might prefer to buy shares directly, as SPVs come with additional fees and less control. But for those willing to take the risk, the sale of OpenSea shares on the secondary market could be an opportunity to make gains. Of course, it's worth noting that restrictions on secondary market sales are not unusual, and many companies do not want deals in the secondary market, so they prohibit it. And it's not entirely clear how OpenSea or other startups in the same position feel about the sale of their shares on the secondary market. But for savvy investors, the sale of OpenSea shares on the secondary market could be an opportunity to potentially increase their gains. As always, it's important to do your own research and consider the risks before investing. For our last breaking news of the day, Satsuma, a blockchain data indexing platform, just raised a whopping $5 million in a seed funding round co-led by Initialized Capital and Archetype. And that's not all. Other big investors like OpenSea, Y Combinator, Homebrew, and South Park Commons have also jumped on board the Satsuma train. So what exactly does Satsuma do? Well, they make it easier for developers to search and analyze data stored on a blockchain, giving them deeper insights into things like the total value locked of a DeFi protocol. CEO Jonathan Cao explained that TVL is a pretty complex calculation to make, and you can't just call a function on a blockchain to get the answer. But with Satsuma's open-source technology from the graph, developers can get the data they need in the form of custom APIs. And their clients include big names like Decentralized, Aragon, and Syndicate. But the real kicker here is that Satsuma's revenue has been growing around 80% month-on-month over the last 6 months, even in the current challenging market conditions. Why? Because there is a demand for better infrastructure in the crypto space, and Satsuma is delivering. Plus, their goal is to make tooling as easy and fast as possible so that Web3 developers can move much faster and create Web2-like consumer experiences. So why should you care about all of this as a crypto investor? Well, with Satsuma's platform, developers can gain deeper insights into the data on a blockchain, which can lead to better investment decisions. And with their revenue growing steadily, it's clear that there is a demand for their services. Plus, with big-name investors like Initialized Capital and Y Combinator getting on board, it's a clear sign that Satsuma is a company to watch in the crypto space. Make sure to comment down below what video you would like to see next and hit the like button if you learned something new or found the information useful. Also, please consider subscribing if you like this type of content. That's all for now. Until next time, guys.